Hey guys, Hit the GammaEdge here coming at you with a market recap for May 5th, 2025. Coming in the market today, fairly bullish position in terms of market positioning. Market trend model also looked bullish, as did the options market. Did have a gap down, strong intraday action though. From price action, what we'll go through those, the kind of what happened under the hood was uninspiring. So quickly, gonna go through our pre-market routine. Again, you can go check our pre-market video where we go a lot more in depth, and then we'll get into the intraday trading. So quickly touching on the market trend model, a newsletter article went out on Sunday, specifically on the market trend model. We got a blog up on our website. You can go check that out, or go watch a prior video if you want kind of a deep dive into what the market trend model is. But in short, it's how we understand kind of real-time buying and selling that's happening under the hood, not just through a price chart. So we were bullish, on the short, medium, and long term. Thing to note is kind of on a short term, we've had a heck of a move higher. We're kind of getting to extended territory just in terms of the numbers of days of extension that we have seen. So if you're waiting for now to be starting to put long positions on, you're probably a little late. Better to wait for some kind of consolidation, pullback, something of that nature. But without it getting tactical, just on a broad basis, the market was constructive to the upside. Next, hitting on SPX options market positioning, looking at SPX-A first, we could see coming into the session, broadly, the market was call dominated above and below spot price. Looking at the distribution of calls relative to puts, there is still quite a large transition zone. However, this has incrementally gotten more bullish compared to last week, compared to 2 weeks ago. Next, looking at SPXP, full complex again, call dominated above and below spot price. Just keep in mind SPXP, that's like your speedboat. This is where your short-term traders reside. This is your 0DT daily, weekly expirations as opposed to SPXA, which is your your monthly or quarterly expirations, which kind of inherently has a longer-term kind of institutional capital flowing through it. So again, in terms of the SPXP, which we tend to focus more on, just given we're kind of shorter term trading focused in nature from an intraday point of view, but we still absolutely do swing trading, and that environment has improved a lot. But just looking at the full complex structure, key level to hold above is 56.85. That's top of the transition zone here. Above 56.85 with a constructive market trend model, we would expect to see price continue higher as we start to really get into that call dominated part of the structure. So now that we understand kind of the general backdrop of the market, again, bullish market trend model, SPX structure, full complex, which is looking bullish as well, we then can get into our 0DT trading, which what we just discussed is a lot more important for swing trading, I would say. Because as we talked about in our article of the weekend, a lot easier to be trading with tailwinds as opposed to trading into a headwind. However, even when it comes to short-term kind of intraday trading, it's better to be trading, or it's more ideal for the short-term and long-term to be offering confluence, right? So looking specifically at SPX 0DT dashboard, the pink box, that's the expected move derived from the options market itself. We have the blue box, which is our DEX or Delta transition zone. Then we have the orange box, which is our drunken sailor range. The delta transition zone is, based off the distributions of the calls and puts in the structure. In between this zone, we expect to see choppy price action. Reason for this is there is little influence in this zone from the options market per se, the moneyness of options, what market makers have to do, et cetera, et cetera. So price is free to roam in this area. That's where, intraday volume is really going to drive and dictate how price interacts within here. But keep in mind that volume is very critical on an intraday basis always because of how much transaction 0DT volume. But it's has the ability to push price around a lot more up here than say once we get above transition into a call dominated environment. So in this zone above 56.80 key zone, and then we also have the drunken sailor zone, which simply put, what this means is even though we're starting to get above the transition in a call dominated environment, it's still a weak call dominated environment. So long as we remain below 59.60, we can see, relatively speaking, there is a lot of open interest. This pretty big goalpost that we really need to see volume push us through and propel us above 56.90. So really the key trading zone that we were focused on today was between 56.35, which is the bottom of drunken sailor range, and 56.90, which is the top of drunken sailor range. So here now, flipping at price action itself on the day, we have 56.35 down here, again, bottom of the drunken sailor range. We have 56.90, which is the top of the drunken sailor range all the way up here. You can see that price action day was contained well within this drunken sailor zone. So, within this zone, kind of inherently, we would expect a lot of choppy price action. So that is where I personally, what I do then is I kind of just have a couple other basic levels that I like to use in context with the zones and the key levels that we come up with. Because in situations like this, that's a very big trading zone, right? From 35 to 90. So if I want to trade within this zone, knowing full well that I should expect choppy price action, I need to have other key levels of reference that I can size my risk against. So that is where I layer on. I know there's a couple lines that popped up, right? But the key ones that I focus on are the opening print, which is this blue line, right? If you watch this line, for a couple of days, you're just going to see price interact a lot with it. Kind of a good gauge too, right? Kind of longs above, shorts below. And then the white line here, this is simply just VWAP for the day. And then the yellow line is prior day VWAP. So replaying today real quick, what we're going to do is just go through price action real quick, go through intraday volume analysis, look at the market trend model, both of those, how those reacted today on an intraday basis. And then we'll go through a couple trades that I took today. So again, right at the open, we went and tested the bottom of the drunken sailor range out there, held like a champ, exactly what it should do. So once we failed to go lower here and we got back above VWAP, back above the opening print, my bias was higher on the day. If we were to lose the opening print, if we were to lose VWAP again, then I would become more interested back down to 56.35 and then lower if we were to breach that level, but that obviously did not come to be. Additionally, looking at the market trend model today, we can see that today was very muted price action. Saw a little bit of filter tick selling on the open, but net we ended in a pretty neutral position. So nothing here was telling us that we should expect kind of a material waterfall move lower. If anything, this kind of just reinforces the point that when we're in the drunken sailor range, we see just a lot of choppy price action. This tells us both buyers and sellers were not super inclined to do anything today. The next key thing that we focus on intraday is our intraday volume analysis. If you're not familiar with this, the TLDR of this is for SPX 0DT, we look at both call and put volume on a 5-minute basis throughout the session. What we do is we understand the distribution of that volume. We find the midpoint, which is called a centroid, and we plot that. And yeah, so every 5 minutes we plot those centroids, we connect the lines for you so you can understand what the trend is throughout the session. And that's what creates the call centroid line, which is the solid green line, and the put centroid line, which is the solid red line. And understanding what the centroids are doing throughout the session gives us two critical insights. The first is we can understand the character of price action. Reason for that, again, it should be pretty evident with this chart. And we'll look at more real-time charts so you can understand the utility of this intraday. But again, back to understanding the character of price action here. Say it's 12 o'clock, so we have this data from the open to 12 o'clock. What we can do is we can understand, hey, the call centroids, which is a reflection of speculator behavior up until that point in time, was very flat. We were seeing no speculation higher or lower. It was basically, kind of like not much of a pulse here. So what that tells us is there's really not a reason to be expected a massive impulse higher. If there was, we would see kind of trending action higher. So this kind of puts a lid on the market, so to speak. So, if you're a credit seller, even, an intraday scalper, kind of just understanding where the top of the range could be is extremely useful. Not only the top side, but the bottom side, bringing us to the put side, we can see that this behavior was higher all session. So, right, this also tells us that there's not really a reason to be expecting, a massive waterfall move lower either, because we're just not seeing that speculation lower either, from the closing of calls lower, the opening of puts lower. We just saw none of that. This is just kind of classic choppy price action behavior. And so we'll get to this in a little bit, but even right here, when we were in a trade in the Discord, we were starting to get up here, we were still just seeing no real speculation higher. And so that kind of tells us that we've kind of tapped out the top of the range for the day. And the second point I wanted to bring up is not only the character price action, but what the potential path of price could be, assuming all things equal. So that kind of ties into the character price action, right? But again, assuming it's noon, we have all this data right here, we can understand, okay, if the call behavior has been this, all things equal, we expect that to continue. The call centroid is likely to follow this path. And then the same thing with the put side, again, kind of lower left, upper right signature. So if that is what we expect, then we expect that behavior to continue throughout the session. And right, price follows where transactions are happening. Price follows the centroids. So if we understand again at noon what the what the potential path of the centroids are, then that is very informative for our strategies for the rest of the session. So again, here's an example of how this is utilized in real time in the Discord. This is from approximately 1:00 p.m. Eastern Standard Time. Here we can see that the call centroids has been this so far. The put centroids has acted like this so far. So hence, we then get our lines of best fit, which are kind of projecting where the centroid is going to go. The important call out to note is, yes, I understand that these are crossing, but this kind of corrects itself as we move throughout the session. As the call centroid, if it does, and it does, we just looked at the end of the day, as this continues to move sideways, that this call volume is going to continue to flatten out as well, which we saw intraday, but I just wanted to address that really quick. But nonetheless, right, the call centroid, again, on this view is not telling us that we should be expecting a material price higher. And same thing to the downside, we should not really be expecting real downsides. Again, this should be useful in understanding, if you trade butterflies, if you trade iron condors, if you're an intraday scalper, kind of understanding where price is going and where price is not likely to go can be super informative with your trading. And so last thing, to just bring it all together here, we stitched together just an intraday GIF of all the intraday 5-minute screenshots, just looking at how price behaves. Again, just you see how they're crossing right now, but that corrects itself, right? As the call centroid stays flat, that put centroid really starts to flatten out as well. And again, those really just kind of do what they do, what we just spent the last 5 minutes talking about. So that tool should be clear how to use that now, and I guess and tandem with the market trend model, the intraday activity, any filter tick buying, filter tick selling, those two tools complement each other really well on an intraday basis. Right, and then just showing you 2 trades that I did, right? I'm just kind of intraday future scalper. So these are the trades that work for me, how my brain works. This may not work for you, but maybe just some ideas of at least how I use the tools. So again, coming into the session, real quick, just recapping those trades for you, so you can see kind of where I bought, sold. So 2 nice winning trades, both I think like 15 ES points each. But anyways, the first buy was right in here. Thought process here is we held 56.35, again, key level, drunken sailor range. We failed to go lower. We started pushing higher. We got above VWAP, got above the opening print. So the thought process here is we were going to push higher. Now, keep in mind, I know that the vol M command, our intraday volume analysis, was not showing any material move higher. So thought in my mind was we are likely to go higher, but it's going to be a choppy ride as we move higher. So kind of so long as we held VWAP, that was kind of my line in the sand, so to speak. We had a nice hold here, and then we got the move higher. I think I sold out right around here, happened to catch the high for that kind of impulse move. And then, the thought process was I did not really want to hold this back down to VWAP because, again, we're in the middle drunken sailor range, so we could easily breach opening print VWAP, and at that point, my bias may have shifted a little short, and in a retest 56.35, we obviously didn't get that. And then the second trade happened at 12:05, right around in here. So again, this is prior to VWAP 56.75. This was a key level that kind of developed intraday based off some of the tools that we had. If you're familiar with our NetStat command, that kind of poked set up intraday, that specific level did. So the thought process here was, prior to VWAP 56.75 key level of confluence, we kept bumping our head along it. And eventually, I figured if it was going to give way, if not, then that's an easy kind of just place to size my risk against. The thought process here is, again, breakout higher, risking, 5 points or better, 56.90 top of drunken sailor range. That was ultimately my upside target. So risking 5 points to make 25 points, that's 5-to-1 risk to reward. What else do you want? And the trade actually had the opportunity to do that, wasn't just making it up. And so, right, continued to hold this trade well as well. With the entry down here, I was able to withstand this kind of drawdown right there. Really just got back to break even, never really threatened my stop loss. And then we got this nice impulse move higher. Now, once we got up here, again, you can see I kind of locked in, took partial profits here, then took full profits here at the top. Sometimes it's better to be lucky than good, but again, when we were looking at the vol M command, we just never saw that speculation continue to move higher. And so kind of at that point, once I got up into this area, the dynamic risk reward of the trade shift from being, favorable to not being as favorable, because, right, once I got up here, I was playing for, 7 points versus back to my stop loss was like 15, 17 points. So that dynamic R shifted to not being in my favor. So that's kind of why I took the profits up here. And then again, price is going to do what it's going to do. Had a little bit of a meltdown in the close, ultimately kind of finished right around the opening print. So all that, if you started at the beginning of the day, came back to the end of the day, you'd think nothing happened. And so, yeah, that's kind of how I use tools on an intraday basis. Caught 2 good trades a day. It's not always like that, but, as long as you risk to reward in your favor, continue to take those high probability setups. So with that, hopefully your pre-market prep intraday tools, how that translates into actual trading, putting this stuff to work, because we're not just theoretical people, right? Like we're the people, trading, putting our money on the line with this stuff. So it needs to work. That's what we strive for every day. So with that, you guys have a good night. I'll talk to you later. Thanks. Bye.